All right, so looking over on what we were taking care of yesterday, this calculating your income taxes, okay? We started off with the single filers. Now, I glanced through y'all's responses, both people in class and online, just kind of quickly through it. And one of the major mistakes, or I guess the most common mistakes I saw, was the difference between understanding the difference between the individual or the couple's top marginal rate and their effective tax rate. Okay. And so something that I saw was that when the question was, what is the individual or what is the couple's top marginal rate? Yes, some people just went through fairly quickly, and regardless of how much income the individual made, they put 37%. They didn't even, yeah, they skipped over the process of seeing where their income what their income put them in, right? They just quickly were like, oh, well, it's 37%. And they put 37% for every single one of those questions, asking the top marginal rate. You can't do that. You got to start with, okay, I give you the individual's income for a reason, because in the US, we have this progressive tax system. So the more money you make, the higher your top marginal income bracket will be, right? And then when it came to the understanding the effective tax rate, we calculate that out. How, Heaven?
You divide how much they're being taxed by how much they get paid a total year.
Yes, you divide their total tax obligation by their total income, and that gives you their effective tax rate. Common mistake I saw in glancing through is people were putting the individual's top marginal rate as the effective tax rate, not doing the calculation to figure out the total obligation divided by their income. Okay. So we already did the first one yesterday. So you can reference the video that was posted yesterday for the answer to the first one. And so people online, it really tells me that you didn't watch the video when you get the first one wrong. And we did that in class, and there's a recording of it. Okay, so make sure you're watching these videos. Okay, so $50,000, we calculated out the tax obligation to be 6,790. I'm not going to go through the calculations on that one because we did that already. For someone making $50,000, their top marginal rate would have been what? 22%, because $50,000 falls between 40 and 85,000. Okay. And then their effective tax rate you get by dividing 6,790 by what? 50,000. And where's my calculator? Just real quick, 6,790 divided by 50,000. That's an effective tax rate of 13.6%. 13.6%. Okay. So going down to the second one, we have someone making $145,000. Let me get the calculator here going so y'all can see it on screen. Oh, there's the 13.6%. Okay, so $145,000. Leo, what's my first step?
You gotta find the
All right, so let's find the tax bracket.
32%.
Is it?
I'm sorry, my bad, no.
24%, right? Okay, so what do I do?
Next, you subtract that value from, 85,525.
Okay, and you got that number by looking over here because it's saying take 24% of the amount over 85,525. We find out the amount over 85,525 by subtracting our income or by subtracting that amount from our income. Okay, done. Now what?
And then, you multiply it times 0.24,
0.24. Okay,
and then add the 14,600.
50 cents. And so our total, this individual's, if you're making $145,000 a year, how much are you going to pay in taxes each year?
Almost 29.
Yeah, 29,000. Now you say, wow, how many of y'all say that's a lot?
That is a lot.
That is a lot, right? So that means 45,000. After taxes, the individual is left with $116,000. What?
That's a ripoff.
Is it?
That is,
Why do you say it's a ripoff?
I'm saying, because you're working hard to earn that and
Sure.
taxes just wipes. all the,
We live in a country that we get a lot of stuff, and we pay some of our national defense is not cheap. Someone has to pay for it.
I mean, no one's really gonna be going into war with us anytime soon.
Because we have a big national defense. If we did not have a big military, would you rather go to war with a small military and then or a very minimal military? Well, then we go to war and we have to build one up
But who would wanna like go to war with us, right?
because we have a large military. Get rid of your military. And, China, Russia, North Korea.
Like,
Because
communism's
Russia-
over.
Huh?
Communism's over.
Oh, but when you have Vladimir Putin, who's the president of Russia, say that the fall of the Soviet Union was one of the greatest tragedies of the 19th century, or sorry, of the 20th century. And he's former KGB. He's wanting to bring back the Soviet Union. So Cold War's over right now because we won because our military, right? We had the military might. That doesn't mean that it couldn't start again. Right? So we have a large military.
I thought you're protected by the UN law.
Laws are only as good as they are able to be enforced. And you're able to enforce laws at the barrel of a gun. Right? A law that's unenforceable is not a law. It's a guideline. And there's no penalty for breaking it. Right? So not only that, but we have Social Security, Medicare, research and development.
Why is it so expensive to live in America?
Well, it is. I mean, yeah. Yeah, it is. Yep. All right. So that number, 28,879.5, gives us our tax for the individual. Okay, there it is. And our top marginal rate for this person is what, Leo? What did we say it was?
Oh, yeah.
24%. They fell into the 24% tax bracket here. Okay. And then the effective rate, how do we get that?
Just divide your number right there, 20,000.
Uh-huh.
By, once you're gonna give them
145,000.
by 145,000. Put that into a percent.
Okay. Times 100. So our effective tax rate is
19.9%.
19.9%. Yes. All right, Daniel, you're up. The next question. Okay. Use the above table to calculate a tax obligation for an individual making $300,000. What is our first step?
300,000 minus 47,000.
Wait. No, not 47. What bracket do they fall in? 35. Okay. So
207,000.
207,000. Okay. So 300,000 minus 207,000, 350. Oops, that's 250. 350. Okay. Now what? Multiply by 0.35. Okay. Then what do we do?
Add 47,000.
Plus 47,000, 367, 50 cents. So what is this number now? The total tax obligation. Yes. So we click here. Are we right? Yes, we are. 79,795. Does that match up? Yep. Okay. The individual's top marginal tax rate was 35%. Okay. But out of their entire income, what was their effective tax rate? Oh, I just clicked on it, but you didn't see it. What was their effective tax rate? Okay, so what do I do after I have the total tax obligation? What do I do to find the effective tax rate? Divide by 300,000, the original deal. And then I multiply that by 100. So our effective tax rate is 26.6. So you can see a pattern here. Your top marginal rate is going to be always be higher than your effective tax rate, 26%. Okay. All right, Heaven, we're not going to do, well, yeah. Oh, good. We're down to the married filing jointly. I wanted you to do a married one. Okay. So married filing jointly. Let's do the third married filing jointly.
As long as it's close to the chart.
Yeah, well, that's why I put the chart in there like every time, because I didn't want you to have to keep on like that. That would be annoying. All right. Okay, so married, so if I give you a scenario, an income tax scenario in which the individual is single, which chart are you going to use?
The single and ready to mingle one.
I hope you can that out. I hope you just-
For those of y'all in the video, Leo just said the single and ready to mingle.
So if you know anybody, set them up. It's available.
How many shirts do you have?
For one.
Remember when we were doing the budgeting and you're like, oh, how many shirts am I going to get from Costco or from Walmart?
Whichever in the $5.
Whichever $5 shirts. Okay. All right. So we're doing a couple making 500,000. Heaven, what's our first step?
You're going to do 500,000 minus, yeah, I'm gonna try to see that. 414, 700, that would, yeah,
Yes. Oops, too much. Okay. So what bracket are we in?
35.
35% is our top marginal bracket. You can put that on the second question there. Okay. $85,300. Now what?
You're gonna multiply that times 0.35.
Yep. 0.35, because we're taking 35% of the amount above 414,700. Okay. Then what?
That is your,
That-
yeah, that is your obligation.
No, it's not our
No,
obligation.
it's not your obligation because, yeah, I forgot one part.
Uh-huh. Uh-huh.
You gotta add 94,735.
94,735. 35. Heaven was about to give these people who make $500,000 a year and not tax their first $400,000 of income.
Oh, you were public enough.
I told you I would have last step.
Okay. Rich getting richer. All right. So what is this number?
That is your total tax application for the-
Yeah. So
I'm
what?
sorry, I shouldn't have interrupted.
So someone making a couple making $500,000 a year is going to pay $124,590 in taxes over the course of that year. Okay. So that's what you would put here under the tax obligation. Okay. Then top marginal tax rate for this couple, 35%. What is their effective tax rate?
You would divide
Oh,
the- you
showed
would
it. I
divide
showed
the-
it.
And I had it on my calculator.
Good.
So you divide the 124 by 500,000.
By 500,000 times 100. Our effective tax rate is
24.9%.
24.9%. Just right there. Okay. And you just, the reason I gave so many examples here is because I want y'all to practice this and understand how the tax is calculated. Okay. Now, if you had to pay this entire tax bill at once, that would be pretty much a sticker shock, right? Like a dagger to the heart. If December or January, right after Christmas, you got a tax bill for over $100,000. How many of y'all is that thought producing some anxiety of getting a bill for $100,000 at once? Right? That would suck. So what do we do? How do we pay for this? Well, it comes for what we're doing today is taking a look at our pay stubs and W-2s. Okay, so when you start working, you will start getting something like this, a pay stub. Okay, and so typically people will. In fact, I don't get this in paper anymore. I get this digitally, and really don't pay attention to it much. As long as the amount that's showing up in my bank account, in my checking account, twice a month is the same or greater than what I'm used to, I really don't pay attention to it. Okay. But it's still good to know what everything on here means. So we start off here, the top part is going to be your employer. Okay. This is the earning statement. So you're going to get this either in paper form or digitally every single time you get paid. Okay. And it's going, yeah, Leah.
This is a topic, but this for the other stuff with the marginal.
Uh-huh.
Why isn't it like, say 10% for everyone across the board?
So a flat tax. Okay. So there's been talk about doing a flat tax like that. Part of it comes down to not generating enough income, not generating enough revenue for the government. Because if we did a flat tax across the board, everyone paid 10%, then it would not generate as much revenue. And right now, our federal budget, running a budget deficit or budget surplus? We're running a deficit. Well, not yet, because we're borrowing money to, which is why our debt keeps on going up and up and up. It is. And one of the things that will happen each year is we have to pay interest on that debt. And that takes up a portion of our federal budget when we pay interest on that debt, right? So the more interest that we have to pay on the debt, the smaller our budget is that we can do other things with. So we're really, by borrowing money, we're really borrowing against our future, like future spending, and because we want that spending now. Okay. But if we did a flat tax and our revenues went down, what would that do to the amount that we would have to borrow? It would go up because our revenues go down, but our expenses stay the same. So we have to borrow the gap there. The other side, or another reason a flat tax is generally frowned upon, is this thing in economics called marginal utility. And marginal utility just means additional, marginal is the additional satisfaction. Okay. If you're making $10,000 a year, would you consider yourself rich or poor? Poor. So if you're walking down the street and you see a dollar bill on the ground, what are you going to do? You're going to pick it up because every single dollar that you find means a lot to you, right? Now let's say you're making $10 million a year. You see a dollar on the ground. What are you going to do?
You would if you're Warren Buffett.
Okay, you would if you're Warren Buffett, but if you're making $10,000 a year and you're on your you're walking down the street on your way to a meeting or to do something that you want to do, and you look down and you see that dollar, let's change it. A quarter. A quarter's no, right? Okay, but if you were making $10,000 a year and you saw a quarter on the ground, you're going to pick it up. So the idea behind marginal utility is that for people making less money, every dollar means a lot to them. Okay, it has a lot of satisfaction. For people making a lot of money, every extra dollar doesn't mean as much.
It seems like more emotional.
It is. Well, it's a behavior, but it's innate to everybody, right? And if we don't use the dollar on the floor example, we can use the Black Friday example. Okay, some people, if you were poor, or would you wait to make a purchase until Black Friday to see if you can get the most out of your dollars? Yeah. If you're making $10 million a year, though, are you going to wait till Black Friday? No, you're going to get it when you want to get it, because those additional dollars that you would save by waiting for Black Friday don't mean as much to you. So because of this behavioral economic kind of truth in things, we developed this progressive income tax system where the more you make, because those additional dollars mean less to you, we're going to tax those additional dollars at a higher level, right? And this is that's one reason behind it. The other reason is, okay, we have so many expenses, we have to pay for it somehow. Who is more able to pay for these additional expenses? The rich are. And so we're going to tax those richer dollars at a higher rate, slightly higher rate than the rate before, right? Okay, so going back to the earnings statement though. Okay, can y'all tell what period, when was this earnings statement released? This earnings statement represents a certain amount of dates. What part of the year?
January 1st to January 7th.
January 1st to January 7th. So this is the first week of the year. All right. They have not been paid before this year. Like each year, it's going to reset. Okay. So for the first week of the year, this employee, one, it's in Texas. So are they paying any state income tax?
No.
No. Do we have a state income tax in Texas? No. Okay. But they're going to be, this is the first one. So everything's going to show, like, kind of be the same. All right. So they're getting paid $24 an hour. That's their hourly rate. Okay. And they're working 40 hours a week. Okay. What's the federal minimum wage in Texas? Or what's the minimum wage in Texas? Yeah, $7.25 or something like that. Unless you're wait staff, if you're a waiter or waitress in Texas, what do you get paid? Yeah, $2.35 an hour plus tips. Sucks. All right. But so gross wages, this person is getting paid $24 an hour. Okay. But even at $24 an hour, working 40 hours a week, they're getting paid $960 a week gross. Now, gross is the amount before taxes are taken out. Okay. If you come over to this column, the right side, you see deductions. Daniel, how many deductions do you see on the right side of the pay stub? Just how many? 3. The first 2 are FICA. Okay. FICA taxes represent what we pay for Medicare and Social Security. Okay. Medicare is a program that every single person watching this video and in this room are going to be a part of when they turn 65. It's health insurance for the elderly, okay? Because when you get older, are you more likely or less likely to need health care? More likely. And so after a certain age, and we just said the age is 65, but at a certain point, to purchase health insurance independently would be astronomically expensive. So we subsidize it. We have a government program that runs it. Okay. And then this third category, what do you think it stands for? Federal income tax. This is called withholding. Okay. So every time you get paid and you get a pay stub, the government's going to go ahead and take some money out of your paycheck to go toward your total tax bill, right? So if we were looking at the pay stub for this couple making $500,000 a year, if we were looking at both of their pay stubs, we would see that their total tax obligation of $124,000, a portion of that is going to be taken out of their pay stub every time they get paid. So they're contributing toward this tax bill a little bit each time they get paid. Okay. So that when tax time comes, okay, and they're going to take that amount of what they have paid toward their tax bill and count that against their tax obligation. So their tax obligation will still be $124,000, but if they've paid $120,000 throughout the course of the previous year, what's their tax bill going to be? That they'll have to pay in April. If their tax obligation is $124,000, but they've paid $120,000, how much will they have to pay in April? Huh? $4,000. So they just have to write a check for $4,000. Okay. What if they've paid $130,000 through the course of the year, but their tax bill is $124,000? They would. What do we call that?
Tax return?
Well, a tax return is what you file, but it starts with an R. Refund. A tax refund. So all a tax refund is giving you money back that you've overpaid in taxes. So do you want to have a large tax refund or a small tax refund? Small. Because it means you've given them too much money through the course of the year. So a lot of people think, hey, I want a huge tax refund. Reality is, no, you want a small tax refund, or you want to pay a little in taxes in April. Because that means that you've kept most of your money through the course of the year. You haven't given the government extra money. Okay? Because when you give the government extra money, they'll give it back to you in a refund, but are they going to pay you any interest? No. Whereas if you've taken that money that you would get as a refund and you've stuck it in a savings account, are you going to get some interest? Yeah. Yeah, so you really want to make as small of a refund as possible. Okay, and so you'll see it has current total and year to date. Okay, as the year goes on, this current total category here and here are going to stay the same unless something changes in their employment. They get a pay raise, obviously that will change. This year to date category here and here, here, and here is going to increase. Okay, it's going to be a cumulative total through the course of the year. Okay, so that's kind of how to decipher a W-2 on here. Or sorry, not a W-2, a pay stub. Okay, and we can kind of look. Yeah, this is another sample one. It's a different individual. Okay, but this pay period is from September 16th through the end of the month. And you can see that, they're working 80 hours a week, or 80 hours over 2 weeks, sorry, 40 hours for that, 40 hours a week, because this is covering 2-week period. They're getting paid $25, so they get $2,000.
Morning, Wildcats.
And you can see the year to date has grown.
The Lord will always lead you. He will satisfy your
Okay.
needs in dry lands. You will give strength to your bones. You will be like a garden that has much water. You will be like a spring that never runs dry. The Lord always bless reading this word. Let's pray. Father, watch over us and bless us. Thankful for a warmer day today. Thankful for change in seasons. And we know that in some ways that makes us more productive. We pray for people that are hurting in any way. We pray we listen, especially that we learn your word today in everything we do. In Jesus' holy name. Amen. Normally, it would give you the lovely Ella for announcements, but do we have an announcement? Oh, we do have an announcement.
I want to go over one more thing. For those of y'all watching on YouTube, we are a private Christian school, so
Just a reminder for students, picture retakes will be Monday, December 7th, if you are not happy with your picture.
we're not a
A
public
reminder
school.
for teachers, there will be a faculty meeting this Friday, December 4th at 3 p.m. in the Partain Library. Teachers, please check attendance adjustment at this time. Have a well-dressed and a God-blessed day.
Okay, guys, the one other thing I wanted to go over before we end today is the W-2. Okay, because to keep track of all of your pay stubs throughout the year, that's a pain. That would be a pain, right? Yeah. So at the end of the year, typically, so like we're in 2020 right now. Typically around February or March of 2021, every person who has worked in the year 2020 will get a W-2 from their employer. If they had multiple employers, they'll get a W-2 from each employer, okay? And that's going to total up everything that they've done throughout that year, all of their income and all the taxes that they paid throughout the entire year. So you'll see the employer's name, the employee, and in box 1, you have their total compensation, okay? In box 3 and 5, it says Social Security wages. This is just the amount of wages that have, just set it on the table, that were subject to Social Security or Medicare taxes. Okay, so this person made $50,000 a year. I don't know, I guess they contributed $1,500 toward their retirement fund. But they made $50,000 over the course of the year. Okay, not 150. So it's just 50, 50, 50, right? Federal income taxes withheld, it totals it up for you. So this person had $6,800 withheld to go toward their tax obligation. They paid $3,100 in Social Security taxes. We don't have to worry about that when we're filing our federal income taxes though, because Social Security taxes are separate from federal income. And Medicare, that's also something we don't have to worry about. That's separate from federal income, okay? So when I give you a scenario to fill out the tax return for, you're going to need to know this information here, right? The individual's name, the individual's Social Security number here, and then wages and federal income tax withheld. So these two boxes here are important. The other stuff, I'm not going to create a complicated scenario for you, so you don't have to worry about this stuff. I will let you know in the fact pattern any contributions to their 401k or IRA. Okay. So this is just what I wanted to go over before we ended today. Okay. Tomorrow, y'all will have a quiz over where you'll have to do some tax calculations. Okay. And identify certain parts of a pay stub and a W-2. All right, guys. I will see y'all tomorrow. Make sure to like and subscribe.